Hi everyone, welcome back to Be Rich. It's me, Vinod, here on the evening of 13th January, Monday. It is day 9 in our 247-day marathon, and I hope that you did manage to invest something in the market. As far as the market is concerned, today we saw a lot of our stocks which we've been looking at being beaten down and coming into correction territory, as I say. Some of them were down by 3% when I was recording this video. Some were down by open positive, then turned negative a little later on. So it shows there is immense amount of pressure on the market and there's lots of selling. What are the stocks which I was looking at, which looked rather interesting, was Natco, because it's at price to earnings at 11 to 12, which is a fabulous position if you want to enter Natco and you're considering been thinking of Natco for some time. It's a fabulous position to enter Natco. And Tata Motors is also was beaten today. Tata Motors at this price is a great price to look at Tata Motors. Those are the shares which I was looking at. Some of you are asking me about Hero Motors. Hero Motors is a fabulous company. There's nothing wrong with it. They are very prominent in India in terms of two-wheelers. We know their history. So I don't need to dive into that of why it's a valuable company. The always question comes into in terms of where is the price to earnings on this. It is today below 20. It's at 19 when I was last checked. It is a great price to enter Hero Motors. But the only problem with Hero Motors is I do not know if 4,000, 5,000 rupees is tiffin coffee range for you. If you are courageous, see, the problem with the tiffin coffee range as an example is the reason why I say tiffin coffee ranges. It has to be the kind of money where you spend on a meal and you don't feel bad about it. Some of us are able to spend, go out for lunch or dinner, spend 8,000, 9,000 rupees and not feel bad about it. We are happy that we had a wonderful meal and we move on and we don't think about it. Some of us, it will really hurt if we go spend 7,000, 8,000 rupees on a meal. That's like literally like half the month's budget we blew on a meal. So each person individually has to assess what is their range of investment on a daily basis they don't mind doing. Because I get ridiculed on this, saying, what are you saying, only invest little, only invest little? Because the people who can invest lots, you guys already know what your lot range is. And you, when 5,000 rupees is meaningless for you, 500 rupees is definitely meaningless. But people I worry about are people like my friend Rupesh behind the camera. I don't want to encourage people like that who are watching this channel to go drop a huge coin in the market, like 5,000 rupees, where 5,000 rupees is a huge sum of money for someone like Rupesh, and encouraging him to buy Hero Motor Corp. Yes, those of you who can afford to buy it, please do consider it. Those of you who cannot afford to buy it, there are other things to buy. That is why I keep on harping. If you have that kind of funds, please invest. Hero Motor is a great company at a great price right now. You can consider it. But if you do not have 4,000 rupees to invest in the market, don't worry. There are opportunities starting all the way down from 20 rupees going all the way up to lakhs of rupees. That is a beautiful thing about our market. It is open to all, stratas of society as long as you're willing to invest in value. So Hero Motor is one of them. The whole sector, microfinance sector, last week, everything went up and all of you thought, what is this? Have I missed some explosive growth which is coming? Should I have bought Spandana? Should I have bought Fusion? A lot of you clamored and saw Spandana going up all the way past 500 and said, oh no, have I missed it? Today, if you see, it has not gone anywhere. It's corrected even further and it's almost back to where it was. This whole thing was just a cycle that lasted hardly 4-5 days. That is why I say, be careful. That kind of volatility is very hard for someone like Rupesh to sustain, where he sees his 500 rupees becoming 300 rupees, or if he's bought it at 300 rupees, it becoming 500, and suddenly seeing that 500 become 300 rupees, he feels quite sore about it. Though he's not lost anything, that's a funny thing. He saw that 300 rupees he put became 500 rupees, he felt very happy. And today that 500 rupees has become 370 rupees, he's feeling rather upset about it, as if he's lost some money. That's a human condition. So that's why I say, if you don't have that kind of mindset, don't steer into those kind of companies where within weeks it can cycle like that. I'm not going up to the extent of saying don't invest in the stock market. There are companies you can look at and don't worry about it, for this kind of fluctuation will not happen in those companies. For example, if you buy an ITC for, you're not going to see ITC become overnight 800 rupees and then suddenly become 400 rupees within a spell of 7 days. So it offers more stability for a new investor. So microfinance is still a lot of pain in them. Your Spandana, your Fusion, your IndusInd Bank, which has Bharat microfinance in it. You have Manappuram, which has Ashirwad Microfinance. All these microfinance companies are still under enormous amount of pain. And for the foreseeable future, this pain is going to be around for some time. You have to understand why this pain is going to be around for some time, because of things which are happening on a macroeconomic level. When you have investors who have huge sums of money, who have access to all kinds of markets around the world, one of the biggest markets in the world is the US market. And right now, the Fed is sitting at an interest rate which is high. We're not used to it. It is at 5. And with the current or the new president coming in, President-elect Trump, things may go higher further. This seems to be apparent in the bond market in the US. People who are holding bonds which are at 4%, 4.5%, 5% are ready to sell it off at a discount or get rid of it because they feel the bond might go up to 5.5. So they rather buy bonds at 5.5, and the lower interest yielding bonds may get further discounted. So that kind of a movement you're seeing in the bond market because of what the Fed came out and said. And if the interest rates goes up, there is more money running towards the American dollar and the American market, because the returns, especially on the bond, will be much better than any other emerging market if you see, just because of the strengthening of the dollar. So all that considered, investing in India, even if the microfinance sector is great, even if things have recovered, it's going to take a little more than that for them to bring all their capital back in floods and invest all that money back in India. When the Chinese market government initially said about investing in China and how the government was going to stimulate the economy, a lot of people saw the FII selling and running to China. And now that the Chinese government efforts don't seem to be bearing the fruit they want, a lot of people speculated they'll be selling there and coming back here. Won't happen because of what's happening in the US right now in terms of their interest rates and their bond yields. So it's going to take a lot more, and there's a lot more pain which is there globally speaking, and that pain is not going to disappear anytime soon. If anything, till the American president comes in and he kind of clearly know what his plans are and what he really does, we'll have to wait and watch. And that wait and watch is going to keep the dampness in the market. So the microfinance sector, the banks, all this are now going to be doing great because the rupee is under pressure, and when the rupee is under pressure, you know what happens. More FIIs sell and exit the market. FIIs have been putting money into our IPOs, they've been putting money here and there, and all that money, especially the microcap sector and everywhere, will be pulled out, and you're going to see pain. So that's why I keep saying, be cautious in your investing. If you're courageous and you know what you're doing, you're ready to drop, let's say, 4 lakh rupees in Hero Motors and see Hero Motors 4 lakh suddenly become 3.5 lakh, 3 lakh, and then take 2-3 years to become 6 lakhs. If you have that kind of tenacity and mindset, kudos, I respect you and you can do that. But for people like Rupesh and me, that kind of pain is too much to bear at a single stroke. So for us, small steady steps is much better, and increasing weight in our barbell incrementally is far better. You do see in competitions people forego, saying they won't lift this weight. You see it in the Olympics. The guy will be sure that he can lift so many kilos, so he'll forego all the lower weight classes, and he'll wait to lift and enter the competition in a higher weight class. Maybe if you're like that, go for it. Me and Rupesh are not like that. We'd like to be cautious. So that is as far as the microfinance sector is concerned. The other stock which has been getting a beating is Dmart. Last week the results came, the results were spectacular, and the market lifted it up past 4,000. Today the news came out, the new CEO and the struggles they're finding with Zepto and Blinkit and Instamart, which Rupesh was kind enough to inform you guys a month back. They themselves have come out saying they're getting a beating with this instant delivery, and these pickup points are being let go, and they're also trying to see how to dump the groceries directly into the house. What Rupesh said a month back is happening, and now the market has suddenly lost faith in Dmart, and Dmart has taken a beating today. It was down 3-4%. Maybe it's come back up, 2.5%. People see value and they'll suddenly buy it in these dips. So, but the point is, even Dmart is facing pain. And like what even, what's his name? Dana explained in another video, where Tatas are investing heavily into giving Blinkit and Instamart a run for the money. Reliance is doing it. So you can expect Dmart facing more pressure as more players enter this. Yes, they're a good company, they're a great brand, but is it at value is something you have to take a call on, is what my advice would be to Dmart. So what does it sum up? All of this is I should bring it to a conclusion, right? Yes. So here's my points to keep in mind. Tomorrow, day 10, as the market opens, when you're looking to invest, there are always opportunities of growth. Even in markets which are going down, there are opportunities of growth. When markets are going up, there are opportunities of growth. It is our job, our effort, our mind that needs to be focused on finding those opportunities in investing. I always believe in incremental. I'm not a person who believes in dropping a lot of money. But like my brother advised you on the Sunday video, there are 3 conditions. If you have a lump sum money and you want to invest it, 1, if you need the money in 2 years' time, advice would be to put it in bonds, take that bonds and buy gold for the short term. If you don't need the money within 5 years' time, put the money in bonds, take the money, interest, and invest in this patas list, what we have. The Natcos, the Tata Motors, the Hero Motors, so those of you who have the stomach to bear market fluctuations. 5 years' time, you can look at the patas list. If you have a lump sum money which you want to invest and for 10 years or more, then put it again in bonds, take that money and passively invest in the Nifty 50 till things dramatically change the fortunes of the global economy. This would be my outlook for those of you who have lump sum money. Other than that, tomorrow's day 10, like I did today, I've got some Natco and some Tata Motors. Log on tomorrow, see what you can consider and look into your kitty and invest wisely. That's all I have for you today. I hope you found this video informative and entertaining. Having conversations with you one-on-one on Instagram has been wonderful, and I will join you guys there for further conversations on what's on my mind through the day. Thanks for watching the video again. See you tomorrow on another one. Bye.
Hey guys, that my uncles Vinod Srinivasan, Anand Srinivasan and I have rolled out our Substack, which is basically a blog/newsletter where we're going to post our original research onto it, and we've analyzed macroeconomic trends. And a lot of you know my uncle Anand Srinivasan and I regularly write for The Hindu, and these articles are also going to be made available for you in the Substack. The link is moatinvesting.substack.com. You'll find it in the description and in the video right now. We hope you go check it out. We've put a lot of time and effort into it. And please give us comments and feedback on what you read. Thank you.